Yes, here we go and live. Welcome everybody to Momentum Stock Traders Super Traders Workshop. Are you ready to rumble? I'm your host and trading mentor, Susie Phillips, the queen of simplicity and predictability. And in this Super Traders Workshop, we've got some heavy hitters by way of simplicity and predictability. So in this workshop today, we've got the amazing 10xing your trading income, starting with your very first 20 trades. The method for more than doubling your trading account balance within the next 20 trades, and teaching you the exact method that will put you in the top 5% of traders who embrace a 95% win rate. I'll also be giving you the simple checklist for identifying the best low risk, high probability, high profit trade setups every single time, all while perfectly managing risk, emotions, time, and resources, even if you're starting out with a tiny account balance. All right, I like it already. So let's hit it. Okay, so for those of you who don't know me, I am a trend trader. My chart reading and trading skills lies in predictability and simplicity. As a trend trader who bases decisions on absolute predictability, I buy the start of trends, and I make it my job to always know in advance where price will reach during the trading day as a target. I always know the level price will reach in a day. I just always do. And I know it sounds crazy, but here's the thing, guys. Price action is a creature of habit, and it loves to return to the scene of the crime, so to speak. So that makes my kind of trading so genius, because the profits are so incredibly simple to plan for, and more importantly, so predictable. And what I mean by that is it's all about the stock's price action history. You know, price always runs to levels that it has hung out at before. Just as soon as it gets to that party house, it remembers the level and it flat out reacts to that level. So because I know that it will react when it gets there, that's my target. It's always my target. What it will do after hitting a target is it always tries to find its safe place, or in other words, its support level. Again, predictable behavior here. So when it hits support, it will react there too. It might set up for a scalp opportunity or a continuation play, or it may just end the trend and reverse. But these reactionary levels is where I set my targets and get ready for what it'll do next based on what it shows me it wants to do next. As I've come to know price action, I've come to discover its highly predictable habits. Price is 100% predictable, okay? So I know simplifying price action like this is fun and everything, but here's the thing, guys. The foundational aspect of price action is so simple that it's not on most traders' radar. And that's just crazy to me, because it's the most important aspect of everything about price action. It really is. Knowing price action, understanding support and resistance in advance of price even reaching those levels, just by knowing that, hey, when price hits a point, it's going to react. And knowing these turning points way in advance of taking any trades is really where it all starts for me. I don't care what stock it is. It can be any stock that I've traded before. It can be a stock that I'm totally unfamiliar with and have never even heard of. It can be a brand new IPO that's only been trading for a few hours. Whatever the ticker symbol is, I can look at that price chart, and within a few seconds, I already have accurately identified where price is going to go next before it turns tail and runs in a different direction. And in just a few minutes, I'll show you how all of this works and how you can predict stock price action and targets too. But let me just stop here and say, these reactionary levels are not what your everyday YouTube casino trader identifies as targets. And you know who they are. I don't even have to name their names. Hopefully you haven't been sucked into their casino methodology only to find yourself blowing up your account by doing what they teach. Oh gosh, I hope you haven't done that. But I know many have. I've seen them. I know some of these people who've fallen into that. So listen, guys. Their so-called targets are not real targets, okay? I mean, if you watch them for more than just a couple of trades, that becomes overwhelmingly obvious. These guys are just silly gamblers and scalpers who utterly are clueless when it comes to accuracy trading. Do they make money? Yes. Most of their trading money that they make is by sucking their YouTube audience into their trades. After they've already bought in, their followers buy in after them, And that's like wind in their sails. So when you've got tens of thousands of followers on YouTube following you into trades, of course you've got serious momentum behind you. And because these YouTubes are delayed a few seconds, when they sell, everybody else is already losing money, right? Because the stock's already dropping. And so it starts to go down, and then their followers see that a few seconds delayed, and then they start to sell because they're told, hey, time to sell. So a lot of their audiences are already in the red, and it's terrible. It's so terrible that they're teaching new traders to do things this way. And as far as their targets go, if you've ever watched them, you know what they do. They tell you their targets are half dollar and whole dollar levels, right? They refer to those levels as mental targets. And sometimes for the super cheap stocks, that's only a 10 cent and 20 cent level. So every 10 cents and 20 cents they're selling. And for me to comment any further on what they're doing would just be a total waste of my time. What they're doing is not real trading. I assure you, the professional traders at the really big prop firms and successful firms, or even professional traders like me, absolutely do not trade this way. Okay? It's just lunacy what they're doing. What they're showing you is nothing but schoolyard antics, where you get beat up and busted up, bloodied, and you run home bawling because you've blown up and destroyed your trading account. What they're doing is a joke, okay? If you're not serious about trading, then you're a glutton for punishment if you're following these guys. You can do it their way if you want to, and you may get lucky sometimes, but you're being rewarded for bad behavior. So if you're serious about this and want to treat it like a real business and be assured predictable income, and you want real skills at this, then stick with me. This workshop will teach you how to do it the right way, the professional way, the profitable way. Those YouTube casino traders, they're never going to teach you the right way, okay? All right. So the key is, and this is foundational, taking a few seconds before entering a trade to identify the levels is where I start with every single trade I make. I have to. Every top trader absolutely needs to do this, and they need to know how to do this. There are no excuses. If you don't do this, you're simply gambling. You're not a serious trader, and you're certainly not a skilled trader. And you will not survive profitably as a trader if you lack this skill and fail to plan your trades this way, okay? Identifying support and resistance is so important because this skill allows me to know, not just to hope or guess, but to truly know with accuracy exactly how much money I'm going to make on a trade even before I click the buy button. I know this sounds daffy, but it really is like having a crystal ball. Structuring trades this way, it takes all of the guesswork out of the equation. And when you've removed all of the guesswork out of the process, guess what? You've taken all of the fear out as well, so that you can focus on each step in the process instead of stressing out, instead of dealing with nerves, instead of dealing with the worry of bouncy price action while you're in a trade. So removing emotion solves one of the biggest trader pitfalls that leads to failure. So this is huge. And the crazy thing is nobody teaches trading like this. Nobody, but I do, okay? So let's start by drawing lines on a chart, okay? We're going to be drawing support and resistance. And there is a harder, trickier, less accurate way to identify targets and support and resistance, and that's just to sort of eyeball them. But today, in this workshop, I'm going to be showing you a tool that I have developed and that I give to all of my mentoring clients so that they can see these levels instantly at a glance without even really thinking about it, so that there's no guesswork, no mistakes, and this is incredibly accurate and fast. And you know, when it comes to day trading, it goes without saying that time is money. And having a tool like this that shows you exactly where these lines are without spending any time or making any mistakes to find them yourself, well, that is gold right there, baby. It's worth its weight in gold, hands down. So let's draw some lines, okay? Okay, so let me just start by saying that my stock selection is very, very simple. I only check off 3 simple criteria for the stocks that I trade. Number 1, there needs to be volume and a momentum surge, which means there's liquidity and price action. Number 2, it needs to hold support levels for a setup. And number 3, it needs to meet my pricing criteria and flow criteria. I tend to focus on stocks that are under $30 a share because that increases my leverageability and profitability. And I like lower float stocks because they move better, which means I'm in and out of a trade in a shorter amount of time, and that increases my leverageability as well. So when I hear a stock hit my scanner, and here's what my scanner looks like, okay? And this is a real-time real-time, artificial intelligence voice alert system, and it's based on momentum, gappers, news, and volume. And it gives me these voice alerts where it literally calls out the stock just as the trends are just starting. So that means I'm never too late. I'm never chasing tops. I'm always at the very start of the trend. So I'm at the low, I'm at the bottom, just as momentum and volume is starting to pick up. So when a ticker hits my scanner and meets my criteria, and usually this particular AI scanner, it does a lot of the filtering for me. So it's going to pick the right stocks that are in my sector, in my price range, in my float range, and all of that. So when it meets my criteria and hits, I go ahead and I draw my support and resistance lines for the targets on my chart. So here I have some random stocks that I have recently traded and worked with my mentoring clients in the trade group. Okay, so these are stocks that we actually traded over the past few weeks. I start by finding the support and resistance levels with this special tool. This one is DLO. We traded it a couple of days ago on August 16th. Okay, so I'm going to go to the daily chart and show you how I find these levels. I have a tool here that puts these lines on here for me. See, some of them are pink, some of them are green. Okay, so all I do is I just go and I grab one of these tools down here and I just click right on top of those lines right there. The most relevant. Like there's some other little ones down here that really don't matter with the price action for the day, right? Because price is already above. You can see here on the daily chart, it's already well above that. So I just click the next one in order and that puts these lines. Okay, so that's the daily chart. I use the daily chart to draw my targets. Then I trade from the 1 minute, and sometimes I'll use the 5 minute to help me. But let's go back to August 16th, which is right here. And I posted this right around 7:30, right after opening bell. You can see why it caught my attention. I missed this move. That was after hours the day before. And sometimes I check that, but I don't always check after hours. But this one, it started to move again above that support level right here. See how this level right here that I just drew, it had proven support after opening bell. We had a little signal here. So that's my cue that, hey, it's proven support. It's going to hit the next target. And sure enough, it did. So entry around $20.18, getting out at around $24, right? So if you're working with what most traders, they start with a $25,000 account because that gets them out of the PDT rule where they're limited to only 3 trades per week. With a $25,000 account, you have unlimited trading, right? Okay, especially on a margin account. But anyway, if you have a $25,000 account, you can easily buy 1,000 shares. And with this trade, that was a $4 trade. So in an hour and a half, you made $4,000. That's not bad. That was DLO. That's how we traded DLO. So see how important it is to get these lines on here. And with that tool that I just showed you, it helps you put these lines on exactly. So this is the $15 level, this is the $17 level, this is the $20 level, and this is the $24 level. So which ones of those were relevant? But by the time we saw the trade, right here, here's 15, here's 17. It was above all of these. So it was working on the $20 level. It was proving that as support. Again, I'm on the 1 minute chart. So we're just going to take it to the next target and make your $4 per share. So there's none of this, oh, I'm only going to trade 20 cents or half dollar or dollar. You're riding the whole trade and you nail it every single time. Okay, so that's DLO. That's how we traded that one. So let's go back to August 15th. Okay, so here's DCTH, and this yellow bar represents where I alerted the trading group that I work with, that I help. And it had already made this big move right around 2 o'clock in the morning, my time, and I'm in mountain time, okay? So I had made this move and then I had found some support, maybe, we don't know. Let's go to our daily chart now and show you where I drew the levels for the group. And by the way, not only do I have this tool on the chart for the group to help them get the lines on there, but I actually post these levels for them. So they don't even have to go to the daily chart to draw them if they don't want to. This is really easy, and we're just going to put one right here and one right here because those are the 2 relevant ones. There's others you can scroll around, but that's what we're working with right now. And let's go back and we'll see, look at that. At that point, once you've got these lines on, you're waiting for this setup, all right? And here we had opening bell and it was a little crazy. What I like to look for is I needed to find support, and support is usually when you see a couple of tails that hit the same level. Like we have these long tails, it's popping up. Here's a little potential entry right here, but I've got a series of tails right there that are hitting. And so what I'm going to do is I'm going to wait for it to come through. This yellow line is my 200 EMA. This is my 50. And I like to be above the 200. So what we had here was an entry above the 200 EMA. That's usually an entry. As long as we've got support, we know where it's going to go. And you can put this on a 5-minute chart to kind of see things a little more clearly. Had a buy signal right there. So getting in there and getting out at your daily target, you're making $1. So getting in at $5.70, getting out at $7.08 for $1.38 per share on that trade. It took you from 7:55 in the morning to 10:20, so a couple of hours, right? But that's not bad to make $1.38 a share on a really easy move. And again, you saw how easy it is to identify these levels. This needs to be support, this is going to be resistance. Just mark those with a white line. Go back to your minute chart, and here was the initial alert. We're just waiting for the setup. Basically, you're waiting for the 200 EMA for it to get above that. If you don't see it on the 1-minute chart, that's when I'll sometimes use the 5-minute chart, because sometimes you'll actually see the nice signal right there. In this case, it needs to be above the 50 EMA. That's this blue line right here. So getting in there and getting out there, really easy, predictable and simple. Okay, the next one I want to talk about is TSAT. This one we traded on August 11th, and I'm on the daily chart to get my levels. And you can see here's the relevant levels right here. We have this line. So I'm going to go ahead and mark those. But again, I tell my trade room members, I give them these levels so they don't even have to come here and look at them. But I'll go ahead and mark that one. Here's one. So I have 4 lines, 1, 2, 3, 4. Go to the minute chart. This thing had got on our scanner pretty early in the morning from making this $8 to $15, $16 range. So that put it on the scanner, and that was at around 5:45 in the morning. And then what we're doing is we're looking for it to find support, and it's down here in between these lines. And if there's enough range in between those lines, we'll certainly trade them, right? As long as we're above the 200 moving average, we'll take it to the next level. And here was a little trade here. Let me zoom in on that. What I like to look for are tails hitting the same level. So we had this tail and that tail, they hit the same level. So that was the entry right there. That was our stop loss, was that level. But I actually used this white line, just getting above that white line on a signal. And then so getting in around $11.49 and taking it to this line, which was $13.35. So that was a $2 a share profit, and it only took about a half an hour. If you had a $25,000 account, you could easily trade a couple thousand shares, and you made $4,000 in a half an hour. So that was TSAT. So the next one was TDS, right? And it had made this move in pre-market on August 4th, right? It had gone from $7.90 up to $9.90 in about an hour or so, okay? Less than an hour. So that's a pretty big move. And this is a company that I was familiar with, so I didn't have any trouble feeling good about this one. So I just go to the daily chart. We're going to put some levels on here, okay? And I get my level tool, and you can see here's the lines, right? There's one, there's one, there's one, there's one. And then there's some others beyond that. But for now, we'll just do the relevant ones just quickly, and it doesn't even take a minute. And now we have some lines, right? And I don't even see those lines yet. But as the day went on, you can see how it treated these levels, right? Here's the first one at $11.27. So remember, it was at $9.90-ish, and it held that level really well. Then it went up to $11.24, and then here it went up to $13.10. So the key here is, first of all, again, on my daily chart, I make it really easy to find the targets that it's going to hit during the day, right? With these lines, you just go ahead and tag a white line on that, draw a white line there, and that'll be your targets for the day. The next step in the process is waiting for an entry signal. It's usually these green bars down here, and they do have a ring alert for the signal, right? If you missed the first one, you can use these green arrows for continuation. As long as it's holding above the moving average, then you can get in, okay? This will be an exit. If you want to use this signal down here, that's an exit. Or if you want to use your target as an exit, you can do that. Then your next entry will be with this signal here. If it's holding support, you can take it to your next target. Here's your next exit. Here we have a signal. Is it holding support? Well, it's below the 50 and it's struggling now. So usually what I do is I wait for it to prove support. And once it does that, like above the 50 and I have an arrow, I'll just take it to the next level. So getting in here at $13.37 and taking it to the next line, $14.82. This stock just kept giving opportunities all day long. It's a really great stock and I really like it a lot. But anyway, yeah, when it starts to sell down after hitting major target, you're going to wait for it to reclaim that 50 EMA, and then you can take it to your next white line target, and you can get out there, or you can let it continue, show that it's going to continue to the next level. Right here we have a signal. It held that level as support. It didn't want to fall below, so it was proving support there, so you could stay with it and take it to the next target. So that's how TDS works. That's the strategy. It's very simple. Getting your targets on, using the tool for the daily chart, right, these lines, then using the 1 minute chart for your entry. And you can use these green bar signals, taking it to your next white line, or staying with it as long as it's holding support.
An asymmetrical trade or investment is when the potential upside of a position is much greater than its potential downside. So if you risk $1,000 for the chance of making $10,000, you're making an asymmetrical trade. If you risk $1,000 for the chance of making $1,000, you're making a symmetrical trade. So let me ask you, which one's more attractive to you? Well, you're probably thinking the $10,000 trade is better than the chance of making $1,000, right? You know, that's the right answer. That's what I'm looking for you to say. Now, even though this idea is simple common sense, most people fall into the trap of making symmetrical trades in the stock market. I'm serious. Most people just make symmetrical trades and they feel like they did something right. Many investors commonly risk 100% of their money in the pursuit of a 100% return. Or even worse, they risk 100% of their money in the pursuit of a 50% return. For example, an investor will buy a stock that some expert touts as having 100% upside, and he'll be willing to ride that stock all the way to zero at a 100% loss if things don't work out. 100% upside, 100% downside. That's symmetry. This kind of symmetry offers you horrible odds. Those are the kinds of odds you'll find in casinos and most sports betting. Most people don't understand this concept and it kills them in the financial markets. You know, I won't touch a trade with a symmetrical risk-reward profile. When I put my money to work, I look for opportunities where I can risk $1 in the pursuit of $20 or even $100 in return. Risk a little, make a lot. That's what it's all about. That's the idea behind asymmetrical trades. Where do you find asymmetrical trades? Well, as I mentioned, the guy who risks 100% of his capital to make 100% return is making a bad symmetrical trade. Now, let's put this concept to work in what is known as asymmetric compounding. You're probably familiar with normal compounding, and that can take a while for the equity curve to increase. But with asymmetric compounding, the equity dramatically increases almost instantly, all right? Almost with the first few trades. So let me teach you how to do this, okay? And this is going to be perfect for you if you have a small account, but you're looking to grow it quickly. This is how you can take a $1,000 account all the way up to $100,000 very, very fast. This is how you can take $10,000 up to $1 million very, very fast. Or you can take a $100 account up to $10,000. So let's take a $100 account up to a $10,000 account using what's called asymmetrical compounding. Now, the first thing that you're going to need to do is make sure that you actually have an edge. And through this course, you're going to be getting an edge, okay? That's what this course is developed for. Now, with this, we want to make sure that we have at least a 1 to 2 risk to reward ratio, or a 1 to 3 risk to reward ratio, meaning that for every dollar that we're risking, we're going to make 3. This is ideal. And then the third thing is that we need to actually apply the principles of what we call asymmetrical compound. And this is super, super powerful. So stay with me here, okay? So normally this is how it would work, right? You would risk, let's say you risk 1% of your account, and if you win the trade, then you're up 3%, right? Okay. Then on the next trade, you go ahead and risk another 1%, and if you win that trade, boom, and you're now up another 3%, or you're up 6% in total, right? So now the next trade, you go ahead and do the same thing. You risk 1% of your account, let's say that you win again. You win, and now you're up a total of 9%, right? Which is great. Now, asymmetrical compounding is a little bit different. The way that works is, let's say your first trade you risk 1% and you win. You win that trade, boom, you're up 3%, right? With asymmetrical compounding, what you're going to do on your next trade, you're basically going to go ahead and take that 3% that you just won. So you're only risking your winnings in this case, plus 1% that you originally risked. So it's a total of 4%, okay? Now if we have a 1 to 3 risk to reward ratio and you actually win this trade, now you're not winning just 3%, but you're actually earning 12% on your account, right? Which is really, really powerful. Now check this out. Now, the key is here is to win a couple of trades in a row, right? Because even if you did this, you just won 2 in a row, right? Instead of just being up 6%, you're up 12%, and you did the same thing. You just won 2 trades in a row, right? And you could stop here, and you could go back to just risk 1%, and once you make the 2 trades in a row that are winners, you restart. Or you could go for 3, right? So for example, let's say you now risk that 12% plus the 1%, so you're risking 13%. And in this case, let's say that you win one more time. 13% gain, what does that do? It's 39%, okay? Now if you take a look at this, now we're up 39% compared to 9. But we've done the same thing. We've just won 3 trades in a row, okay? So this is extremely powerful, this compounding concept, this asymmetrical compounding concept. You've dramatically increased your profits simply by using this concept of asymmetrical compounding. Now, if you take a look at this, even if you lose trades, okay? Because the reality is you're going to lose trades. But even if you lose trades, like you could lose your first 2 trades and then go on and win 3 trades in a row. And it's so powerful because look, let's say you risk 1% and you lose it. What happens now? You're down a negative 1%, right? You're down 1% on your account. Well, the next trade, you're going to risk another 1%. Let's say you lose this trade again, okay? Now we're down another 1%, or we're down a total of 2% on your account. And then let's say on your third trade, we risk 1%, and we go ahead and we win 3%. Well, now we're up a net of 1% on your account. Now we do the same thing. We risk this 3% plus the initial 1%. So we're risking 4%. And if we just win this trade again, boom, we're up 12%. Even though we lost those first 2 trades, okay? This is really, really powerful. And again, this is just the tip of the iceberg of what you can do with this. So let me show you something even better, even crazier. Let's say, for example, you have a small account, so maybe maybe you want to be a little bit more aggressive with this money. Let's say that our risk is 5%. So each trade we're risking 5% in order to make 15%, right? It's that 1 to 3 ratio. So let's say that you lose your first trade. Okay, boom, we're down 5%. Oh, wow, right? The next trade we risk another 5% in order to make 15%. And now look, we're down another 5%. So we're down a total of 10% here, right? You can't win them all. But right here, we come in here, the next trade we actually win, okay? We risk 5% to make 15. Now we're up a total of 5%, which is great. And then what happens? We risk 15% plus 5%, or a total of 20% in order to make 60%, okay? Now check this out. Now if you lose this trade, all we're down is 15%, right? It's not that big. But if we win, we're up 60%, which is huge. So this is a method called asymmetric compounding. Guys, you've got to set a parameter on what you're going to risk. And then what you do is you tack on those winnings, okay? So tack on whatever you win to the amount that you're risking. And you're just looking to win 2 trades or 3 trades in a row. Now, if you're winning 2 or 3 trades in a row, that'll happen. It may not happen right away. It may take 10 or 20 trades, but even 30 trades that you do. But also at this rate, if you just win 2 or 3 in a row, you're going to grow your account a lot bigger by a lot bigger percentage than if you do it the way everyone else is doing it. So This is how I would personally grow small accounts if you're using this method. It's extremely powerful once you get your head wrapped around it.
And so now you see the utter simplicity and predictability of it all. And that's the beauty of how I trade and how I teach and how I mentor my clients. It's really just all about simplicity and predictability. My tools are the AI voice and video alert scanner. Also, my live news alert scanner. This is also a voice broadcast. My trading algos that give me the signals, these green bars, these continuation arrows, and these bars that make it really easy to identify where price is going to go during the day. And so that allows me to set up my trade plans. So my risk reward tool that allows me to know my 3-to-1 profit ratio, and it gives me my stop loss level for when I'm entering a low dip trade where price falls below my moving average. So I'm looking for a dip buy, and this has really helped. So I just use this tool and it gives me my 3-to-1 risk to reward, and it's really accurate. Look at that. I already had my daily line on this particular one, but this is also helpful. It helps me have trailing stop losses. I also give them the PAYS calculator, which shows you how to plan out your next 20 trades in order to double your account in 20 trades. So if you're working only with $1,000 and you want to do that same thing in 20 trades, you will have more than doubled your account doing it this way. So you get that tool, the strategy training, the mentoring, the live trading, the live chat with traders in our group, which also includes the daily watch list. And of course, one-on-one mentoring. So again, it's all about simplicity and predictability. And if you need any help with your trading strategy, if you need any guidance, if you need live trading alerts on stocks before they've made their big move so that you can get in early and profit all the way to the top every morning with a decent watch list that I have for all of my members every morning. And again, I start in pre-market around 5:30 in the morning my time, which is really early. I'm up in the dark. But we have a lot of fun trading. So if you want to join us, we welcome you to the group. Anyway, I hope this was helpful to you. If you have any questions, let me know and we'll talk soon.